What's going on, everyone? Welcome to the Eternal Money Podcast. I'm your host, Freddie McKayan, and joined with me, as always, by my brothers Nick and Nelson. We are three regular 9-to-5 job employees who are on the path to financial freedom. We created this podcast to share our knowledge and opinions with the hope of inspiring others to lead a similar lifestyle. Each week, we'll go over the following on our podcast: State of the Market, Buy Zone, Watchlist, and our weekly topic train discussion. We are also here to learn from each other and you, the listener, so please drop any questions or comments that you may have at any of our social media outlets. Follow us on Instagram at Eternal Money Podcast, follow us on Twitter at Eternal Money Pod, and find us on YouTube at the Eternal Money Podcast. Now, before we begin, let's go over our disclaimer. We are not financial advisors. The ideas and opinions expressed in the Eternal Money Podcast and any of its guests are for general information and entertainment purposes only. Any reliance on the information provided in this podcast is done at your own risk. So please do your research.
Man, we want to shout out the listeners and the followers. We
Yes,
appreciate the support and the love that you guys have been giving us. We see all of it. We see all the comments. We see all the DMs. We see all the follows and the subscriptions and everything. And we're very happy with it. So we're glad to be giving you guys some value. And, thank you so much, guys.
Appreciate
you for the love.
And, giving us your love.
Started. In this next segment, State of the Market, in the week ending July 22nd, SPY went up 2.59%, QQQ went up 3.47%, DIA went up 2.05%, and IWM went up 3.71%, fellas.
I mean, it was a very, very good week in the market, man. I mean, it started off good. Monday, market it gapped up. It was looking good in the morning, and then news came out from Apple that they're gonna slow down their hiring and they're gonna cut spending in some of their divisions, and then the market took that as a negative sign, so they just sold it off for the rest of the day Monday. That's a sign of a bear market right there. Mm-hmm. Every news is bad news. They just look for anything to dip the market. But
except for the banks.
Yeah, true. So then that was short-lived, though, because then Tuesday,
that was.
Tuesday, the market gapped up again, like that Apple news didn't even exist, So right. That's why we say sometimes the news doesn't even matter, man. Yep. They're just like they're just looking for a catalyst, right? And then
that's right.
That was it. Right. That was it for Monday. So Tuesday, it was like that never happened. Wednesday came, all eyes were on Netflix earnings and Tesla earnings. Earnings weren't great for either company, to be honest, but the market liked it. So there you go. Again, the news really doesn't matter. And then, so Wednesday and Thursday, market was strong. Market was very strong. One of those days, the S&P was up, I think, over 100 points or something. I'm not sure if it was Wednesday or Thursday. Rally. It was crazy. So that was great. And then, what was it? Friday came, and then I expected the market to take a breather. I texted you guys that the weekly expected move had been hit earlier this week. And usually when that happens, the higher probability is that they're going to try to pull it back, because the options market, they live on that expected move. So the market makers, they don't want the market to go too far either way, either pass on the lower side or the higher side of the expected move, because that's when they start losing a lot of money, and then they have to start hedging, dynamically hedging by buying or selling S&P futures. So I wasn't surprised that they pulled it back Friday. It needed a breather. When it was up, I think, over close to 4% or 3.5% the first 4 days of the week. So they leveled it off, and then so no surprise. I mean, that doesn't affect anything, in the short-term picture. Market's going to go up and down, right? So then volume was still good, right around average. That tells me it's a legit up move right now, SPY is out of that 20-point chop zone that we talked about, that 371 to 391. So that's a good look. Trend is up. That's good. If it gets back in there, then we'll have to reassess. But right now we have to play it to the bull side, It's out of that area. And the next thing I'm going to look at as far as the charts are concerned, Now that SPY is out of that chop zone, I'm looking at the daily's looking good. It's over the 20 easily. Now I'm looking at the weekly. The weekly is getting close. If SPY goes up another about 4%, then it'll get above that 20 on the weekly, and then it'll be really looking good for the bulls. So I'm liking that. So that's what happened last week, and then what I'm gonna look for next week, Jerome Powell and the Fed, and all eyes are on them. So
that's right, man.
At the end of last week, we talked about there was a 70% probability of a 75 basis point hike. That actually went up this week to 80%. So, I mean, they're probably going to stick with that, you know. And then what else? Earnings, big earnings coming this week. Microsoft, Google report after the bell on Tuesday. I don't think those matter as much as the other ones later in the week because the Fed is Wednesday. So they could pump it a little bit or hurt it a little bit, but really the Fed is what's going to determine what happens this week. And then Facebook, aka Meta, they're in a bad spot because they report Wednesday afternoon. So people are still going to have
man.
They're going to have that
with the Fed talking too, man. That's tough.
They're going to have the rate hike still in their mind. So it could be good for Facebook, but if the market is looking at the hike as a bad thing, it might not matter, you know. It might hurt the stock even though it's good, you know.
Right.
And then the main event is Thursday. Amazon and Apple, you know, those are the top dogs. So I'm gonna be fascinated looking at the markets on Thursday, you know, playing up to the earnings of Apple and Amazon because everybody's gonna be thinking about the rate hike. Also, the rate hikes that hurts big tech because they can't borrow money cheaply, you know. So
that's right.
If they stay 75 basis points, I mean, maybe it won't affect as much, but if the Fed surprises, it could hurt. And what else? The Bears are looking for big misses this week. You know, they're looking for big misses and a big hike to take this market back down. But I don't know. We'll see what happens, man. What do you think, Nick?
Hey, man, just like you said, I mean, a lot of the things that you say, you already know. We see the same. We have different strategies, but our fundamental basis of knowledge about the market is the same. So pretty much everything you said, I'm going to agree with. This week was very exciting. We had a nice rally this week, 3-day rally, which is great. It was great for pretty much all the sectors to see some kind of lift, right? And I think that going into next week, like you said, it's going to be all about the Fed. It's going to be all about the interest rates. There's still some things in the market that are going to be unaffected, like problems that are going to be unaffected by the hike in interest, like the supply chain. That's really has nothing to do with the interest rates, and that's still a problem in our situation right now. So there is some catalysts that are going to continue to hold us down, but like we said, the S&P is above the 20. That's a confirmed uptrend. So we are in an uptrend as far as I'm concerned in the SPY. We're in an uptrend until we're not. Until it breaks that 20 coming down, then, you know, I'm looking at things as a bull. So everything looks good as far as that. Like we've been saying for the past few weeks, the short term, we're looking good, man. Every day we're going up, and the SPY is not breaking down yet. So the SPY, in my opinion, is like the wind of the market. Everything is going to follow the SPY. So if the SPY goes up, we're going to lift the market. If the SPY goes down, we're going to break the market. So I think as of right now, we're good. The hike in the interest rates next week will be our catalyst, and then also big tech earnings like we talked about. Those are going to be the things that are going to be swaying the market up and down next week. The fear and the greed of everything together, that's what's going to be. But I had fun this week, man. It was great. It was great to see things fly a little bit. It was nice to see some of the sectors that we've been adding to, like the industrials. We were adding to that last week, and then this week we got the breakout. So, you know, it makes you feel good that you're buying things at the right zone. And then, again, as the market pushes up, it's going to give everybody hope, like I talked about last week, that we're doing all right. So a lot of uncertainty is kind of becoming certainty as far as the uptrend because we're in a bear market, but things are pushing up. So the only thing you got to kind of be concerned about is this a bear market rally, which is just a little push up, or is this going to start to change the trend of the market? So I don't think the trend is changing just yet, but I think you know, the bear market rally that we've been having it's been refreshing and it's been good to see. So that's my take.
For sure. And I just want to add to that.
Right.
Yeah, that's the thing when you're buying your purchases, setting up your purchases. You have to make the buy before the move happens. You know, like that's the thing. It might not look good right now, but that you're trying to get a good deal. That's what you're always trying to do. And then I have to update commodities, of course. Oil.
Give it to us, man,
Yeah,
please.
oil is
Give me the corn too, please.
It's coming. Oil is officially in a confirmed downtrend now. It's down about 20% in the past month. Oil.
Yeah, that's good.
And my friend gold, it finally had a winning week. So
the GLD, baby.
That was good. It's getting close to that 20 EMA on the daily again. Remember, about a month ago it was there, and then it failed. So I'll be.
You gonna put some on that breakout or what?
I mean, I already have a position in gold, so I don't know if I'm gonna add to it or not. But if it gets over that, I mean, I'll be thinking about adding some more on that. And then the bonds, they're looking strong. Uptrend on the daily, they closed over the 20 on the weekly. So let's see what the rate hike does to them, because they've been looking really good, the bonds, the past couple of weeks. And lastly, the agriculture products, they're back around the levels of when
Turn your microphone up, man,
when 2022 began. Everything, that has a lot to do though with the weather lately.
Of course,
and there was a report on Friday that Russia and Ukraine made a deal to resume exports of grain. So that's leveling the prices back down. I mean, those things they can't be too high or too low. They have to stay around the same price. It sucks for the farmers but that those levels shouldn't really stick. And one more thing, volatility, it just keeps getting lower and lower and lower. So people need to start hedging now. They need to start hedging their portfolios now before the big spike comes. You can't look for protection when the storm hits. You have to prepare before it comes. So that's
risk management.
That's what I got. That's what I got on that, man.
That's good, man. And we're just talking shit here, but all these numbers that Nell gives us about commodities and our resources as a country, these things matter, man. And these numbers are important. So we're just talking shit, but just listeners know that these numbers that we're saying, they're important, man.
Yeah, the food supply, they're predicting it's going to be a big problem in this country in the coming months. So, I hope they're wrong, but hey, you gotta keep your eye on it,
And don't waste any food, peeps.
I'm not saying go to the store and start stocking up on cans of food and water and stuff, but
not purchasing advice, not resource advice here.
Just keep your eye on things,
Yeah, man, you already know.
In this next segment, Buy Zone, Nick and Nelson will discuss their weekly buys, open trades, and profit taking. For those of you who are new to investing, this is a great opportunity to get yourself familiar with the different companies that they mention, so you can begin your own research and investment strategy.
Man, I traded so poorly this week, guys. Man, I feel like I should have made a lot of money this week, but I left a lot of money on the table. I did close a couple of trades that I had on for profit, which is good, but I'm not trusting myself. I like to take my quick profits, but the setups that I had, they were there, and I just cut them too short. So yeah, Tuesday I closed Mastercard. I had that Mastercard trade that I put on last week.
Yes. How'd that do?
I was playing it into earnings, but Mastercard did exactly what I expected it to do. It went up. It flew up. I think it was up about 10, 11 points this week. But I cut it at 50% profit, which is fine. I mean, I'm not too upset with that. That's fine. I wanted to get it.
In this market too, bro. In this market, you got to go green and get out.
Yeah. So that and that's a shorter term trade because their earnings is next week too. It's not a big player, but it's the 20. I think it's the 28th or 29th. So I don't.
Yeah, you said you were playing the earnings on that, right?
Yeah, I was playing it.
Right?
I was playing the for the run up to earnings, and I got the run up. So
right.
So I'm not that upset with that. What I am upset about is Tesla, man. I had Tesla. Remember we talked about right after Elon backed out of the Twitter deal. I said that's going to be a catalyst for Tesla. They're gonna start going up, and they did, and they've been on a tear. I think I put that trade on when Tesla was about 700, and I think on Friday afternoon it closed at around 815, and it was higher than that
Huge
too.
Rally. Huge rally this week.
But what did I do? I closed the trade before earnings. I closed it for profit, 35% profit. But if I would have held, bro, I would have made easily over 100% profit. You know what I'm saying?
Damn.
I mean, hindsight's 2020, but
in those situations, you can't look at it like that, though. You know,
I
it's
know.
kind of like you're getting in there, you're flipping it, you're trading it, and you're getting out. It's
Yeah.
almost like when you buy like a house to flip, right? Like you don't look back on it in 2 months and say, "Shit, this house just went up 5% more. I should have held it." You flip it, you get your profit, and you get out. You know?
yeah, I know. But it's like you know what it is when after the fact, when you see that you were so right, and then you're like, I could have made so much more money on this trade, but. Hey,
that's what hurts.
You know what it is?
Those are the situations.
It's the bear market. I think it's in my mind, bro. It's in my head.
Exactly.
You know, it's like I'm like I gotta get my money and get out because it's gonna go down the next day. You know,
you're being cautious, especially with earnings around the corner. You're being cautious,
and that's what it was. I took it over right before their earnings, like that Wednesday afternoon. I said, I got 35% profit. What if it tanks? You know, because Tesla. I don't even know. Like they barely sell cars, so I don't. I'm like,
I know,
a bad number could come out, like so.
Man. Could you have trimmed it? Could you have trimmed it and let it run?
Nah, I mean the position wasn't that big, you know.
Oh, okay.
I wish I would have had it. It was a small position, but still, even when those hurt too, you know.
Oh, of course.
So yeah, whatever. But I got to get better, you know. I know I made profit, like I should be happy, but I feel like I should be a better trader than that, you know. So
hey, man, it's all right. We're still learning out here, right? We're still learning to be a
exactly. I
better
mean,
trader,
that we got to show. Like, it's a working process, you know.
That's it, man. That's it.
And then so I didn't open any new trades this week, but my gold trade is still open and it's working because gold was up a little bit this week. So I'll definitely have a lot more patience with that trade because I have all the way until September expiration for that one. So. That's all I did as far as trading this week. I wish I could have traded more, but with the heat, like I can't be on my phone out there at work sometimes, you know. Like
yeah, man.
So, hey, we'll see. Yeah. We'll see if we can find anything for next week. I mean, there should be a lot of volatility with all the data drops and everything. So hopefully, we'll get on the right side of some things and let some winners run, you know.
Yeah, man, for sure.
So that's what I did for trades.
Well, first of all, I'd like to say for number one is that just like what you just said, you say that you can't really be on your phone when you're working and it's hot out there. So, but you still trade, right? Because you're a trader, so you trade. So I think that's an testament too for people that are listening that feel like, man, maybe I'm a little bit too busy for this game, or maybe I'm too overwhelmed with my situation. I got kids, I got work, or yada yada yada. Life is busy, right? But pretty cool, man. That you're out there. You work with your hands. You're a laborer, but you still make time to get in there and trade and put your trades in. Even if it's automated, you still get in there and you still do it. So, for the people that are listening that are very, very busy, there is a way when there's a will. So don't count yourself out until you try and see what you can handle.
Yeah, the markets are open from 9:30 Eastern time to 4 p.m. Eastern time. So I mean,
and crypto trades 24 hours.
Yeah, and between that window, I mean, people there's some time. Even if you put some just some limit orders in, and hopefully they get filled and everything.
Sure, man.
I mean, there's got between those 8 hours, or whatever, 8.5 hours. There's got to be something like you have time to look. You have time to look at the market. There's no excuse. So
there's no excuse.
Yeah. So. Yeah, man.
So, yeah.
What you got?
Yeah, anyway, let's get into it here. You guys know what I do, what my motto is every week. I try to find quality dividend stocks that are undervalued in my setup that I can buy and capture the best dividend yield that I can and add to my forward income. So let's go through it here. We're going to go through some of our buys, and I'll explain it a little bit. All right, so I didn't invest or trade on Monday and Tuesday because it was it was a little up and down, and I wanted to see where the market was going. So I let it cool down a little bit. And then Wednesday, July 20th, there was a gap down on a company called Philip Morris, which is another cigarette company. Man, the listeners must think I'm crazy with these sin stocks. Like, man, all this guy buys is cigarette stocks.
Right.
But, yeah. So there was a little gap down there. And normally I wouldn't hit a stock that was down 5-6% in one day. Usually I let everything cool down. I let it, come in. I let it set up, and then I buy it. But I saw that Philip Morris was hitting a previous level of support, and I knew that thing was going to hit it and then come back up. So as soon as I saw it hit that level of support, and when I say support is the latest low. So I saw that it hit the latest low. And then it started to shoot back up, so I grabbed $100 worth. So that was 1.09 shares at 91.29, and that was a 5.48 dividend yield. So just under $6 in forward income. That was Wednesday. Let's go to the next day. That was my index day. You guys already know, July 21st, my sister's birthday. So happy birthday, Christine.
Happy birthday.
Happy birthday.
Hey, happy birthday to her.
She's
Happy
down in
belated.
North Carolina with my nephew and my mother, by the way. So, so 21st, that was her birthday. I put $125 into VTSAX, which is the Total Stock Market Index Fund. You guys know I do that every week. It's in my Roth IRA, which is tax-free. And that was 1.28 shares at 97.37, 1.6% dividend yield, just under $2 of forward income. So, like I said, that's a long-term play. So, I'm not really counting that income. It's just kind of just accumulating as we go. All right, then let's go to Friday, the 22nd. Same deal with this. If you guys saw yesterday, Verizon and AT&T, they shot down, right? They shot down. They got hit hard, and Verizon was down like almost 7%, right? And again, normally I wouldn't do this. I wouldn't go in and I wouldn't buy a stock that's down so much because I like to wait at least 3 or 4 days for it to cool down and see where it's going, right? But same kind of thing. I thought that it was an overreaction. And I thought that it was gonna come back up, which it didn't. So that was kind of a mistake on my end to buy it, but I did. And that was $100 of Verizon at 2.3 shares, and that was at $44.50. So the dividend yield was higher. When the prices come down on a dividend stock, the yield goes up. So and then you lock it in. So whatever you buy it at, that's the yield that you're locking in those shares for life. So I got it at 5.76% dividend yield, and that's just under $6 in forward income. And then the last one was a company called Universal Corp, which is, again, it's a tobacco company. They're a manufacturer. They actually manufacture the tobacco leaf. So they don't produce cigarettes. They manufacture the leaf to other companies. Okay. And I've been holding on to them for a long time. I've been investing in them probably since later part of 2018. So that was $100 into there. The ticker is UVV, and that was 1.8 shares at $54.98, 5.75 dividend yield, and then just under $6 in forward income. So total, this is pretty much my typical recently, $425 invested, 4.64% dividend yield, and just under $20 in forward income. So very happy with that, gentlemen. And you know me, I just continue to chop away at it.
Nice. Base
hit, brick by brick. We're just building this income and continuing to accumulate these dividends. Now, let's go to the weekly. No dividend payments this week. Absolutely none. So typically July is a slower month for dividends, so not one payment this week, man. So we're just we're going to continue on and just keep doing it, man. So those are my buys for this week, Flip. What do you got?
So in this next segment, Watchlist, Nick and Nelson will discuss potential opportunities for next week and where to deploy capital. For those of you who are new, again, to invest, this is the great opportunity to get yourself familiar with the companies that they mentioned to begin your own research.
So Watchlist for next week. I was a little early on Verizon, to be honest, so I'm probably going to put them on my watch list, see what they do. If they consolidate a little bit, maybe I'll buy 1 or 2 more shares. The industrials that I was buying, that broke out, so that kind of got away from me a little bit. A lot of my setups, they got away from me this week because there was a big rally in the market. So things were set up for me to buy, and I was a little too late, and then it broke out above the 20, and then that's it. For my buying strategy, once it's above the 20, it's a breakout, and the ship is taken off, and I got nothing to do with that anymore. So I only buy when it's at a bottom and at a low that I can get shares at an undervalue. But I'm just going to continue with Verizon and then see what else kind of breaks down with the earnings and everything next week. But right now I'm just kind of keeping it open, my watch list for next week. But Verizon is definitely on the list for next week.
Patience, my friend. Patience. I mean,
This
is so funny because you know what I have on my watch list? Verizon. I also have Verizon on my watch list. It's like we don't look at the same things, but we think so much alike, man. So I'm definitely taking a deeper look at Verizon. They closed at 44.45 on Friday, and it hasn't been that low since November 2017, exactly. Bro. So it's like,
and I got them at 44.50. Yeah. So I waited for the end of the day on Friday, and then I bought.
I have Verizon before years ago when I had a bunch of stock, man. And it's a good company, man. It's like,
Good payer too, man.
I have Verizon Fios as my internet provider, and I have Verizon Wireless. So I love Verizon, obviously, and then it pays out $256 per share annually, and at about over 5.5 yield. You know what I'm saying? So
depending on where you buy it.
Yeah. I'm saying. So I'm definitely taking a deeper look at that. I'm looking at add to my portfolio too of stocks.
Yeah, man.
And then that's the thing. You got to wait for that right moment, and this could be a good opportunity. Not investment advice. Do your research, but
absolutely not investment advice.
Yeah.
We're just telling you what we are doing, what we would look to do.
And then
do your research.
My bullish setup, another one you mentioned before, PM Philip Morris, man.
You see this, man? You see this?
And
Peeps, do you see this, man?
Yeah, we didn't even talk about this
great
before the show
minds think
started.
alike.
Like this,
We didn't.
this is organic. So
Yeah, exactly.
you bought it at a good time because I saw Thursday they had earnings and they shot up.
Yep.
So
exactly.
you're already up on that buy.
I'm up like 4% already.
Yeah.
that's
So
cool,
they Philip Morris closed over the 20, the daily 20. If it shows some more momentum early this week, I would jump on it with some, whichever way you trade it, with shares or with calls. That's what it is. And then I'll be watching the Qs this week. Tech, it could be a short-term short play with the rate hike coming, plus the big earnings. So
Yep.
I'll be watching the tech sector very, very closely this week. And just, whatever they tell you they're going to do, just follow it. Just follow the market. Don't try to be too smart.
That's it,
If
man.
it's going up, just hop on that bandwagon. If it's going down, hop on that one,
That's it.
Sometimes you just got to follow the trend, right?
Yeah.
It's
That's
that
it,
simple
man.
sometimes. So that's my watch list.
Oh, I forgot to mention, I put a little more shares on my Delta trade, and then I opened one for oil too, swing trades.
Oh, nice.
So I opened an oil swing trade, and then I think I'm playing the double leveraged,
Okay.
which is not investment advice. Nuh-uh. Not investment advice, just sharing what I'm doing. And so I added to my Delta trade, and I put one on for oil. So, few shares here and there. I don't have a lot of money right now to give to the trades, swing trades, but I'm a trader, so I'm going to trade. If I got $20, I'm going to trade because I'm a trader.
Listen, got to put your money to work for you, man.
That's it, man. That's it.
All right.
That's where we're at.
All right, fellas. For this week, our topic train discussion is how to invest in a bear market. So what is a bear market, right? A bear market is defined as any period in which prices fall by 20% or more, which typically makes many investors afraid of investing in the markets. During this time, a lot of people end up taking their money out of the market, which then results with them losing any gains that have been erased by the current market condition. Now, one thing to remember, though, is after looking at the past, is that a bear market has always been followed by stronger gains in stocks that eventually, as a whole, ends up stronger before the bear market began. So here's the first tip from the flip. Invest in index funds. For most investors, most of the time, the best investment is in an S&P 500 index fund. For example, you have FXAIX, which is the Fidelity 500 Index Fund, SWPPX, which is the Schwab S&P 500 Index Fund. And if you remember from 2 weeks ago, Nick invested in the VFIAX, which is the Vanguard 500 Index Fund Admiral shares. So these tend to give you the best balance of diversity, since an index fund represents a broad spectrum of individual stocks and assets versus growth. So while individual stocks may not recover from a bear market, historically the stock market overall tends to do so. As a result, buying into an index fund while the market is down is a good way to buy a historically strong asset.
Well said,
at a
Philip.
reduced
That was
price.
that was a beautiful explanation of a bear market. It really was wonderful, bro. That was
Yeah.
very good.
Mhm.
All right, so let's talk a little bit about this. Now, a bear market is something that brings a lot of uncertainty, right? So it brings a lot of uncertainty and makes people very uncomfortable, especially when we're talking about common shares. We're talking about just somebody that's putting their money into the market and hoping for the best. Those are usually the people that are very, very hurt by the bear market. So my advice, what I would do in a bear market, I'm going to talk about both. I'm going to talk about investing and I'm going to talk about trading. We should probably do an episode that we go over like the differences between being a trader and being an investor, right?
Yes, sir.
Ooh, that could be a topic train for another day, man.
Absolutely.
You know what I'm saying, Flip? But yeah, so let's go over this. I'm
Could
going
be
to give
next
you both
week. You feel
aspects
me?
of what I think, in my experience, what is a sound advice. So let's talk about trading first. Now, trading is this is what I would say about trading. When you're trading in a bear market, number one, I think that you should focus on less trades, in my opinion. You should focus on quality over quantity. You don't want to be reaching. You don't want to be messing around with too many penny stocks, things like that. You don't want to go anywhere near things that can go to zero, especially in a bear market. So that would be number one. So I would be very, very cautious as to what you trade. Look for quality over quantity. Going back to the point that Flip made, I think that's very sound advice, even for trading. Even as far as a trader, if you want to be a little bit more on the conservative side, especially in a bear market, you can trade the index funds. You can trade the indexes. You can trade the SPY. You can trade the Qs. You can trade, all small cap, mid cap, large cap. All those things are on the safer side because it's gonna be hard for me to be convinced that those funds are going to zero. The S&P 500 is going to zero, so I don't think so. So if you feel like you want to be on the more conservative side and you're not ready to be very aggressive, either you're not experienced or you're not comfortable with it, then I would look to trade the indexes. Now, as far as investing in a bear market, I think it's all about quality, in my opinion. I don't think now is the time to really be reaching and going more into risk as far as investing in companies that are not making money or not real businesses and things like that. I think you should go for quality at this time. I'm not saying forever, but at this time during a bear market, I think your quality S&P 500 companies that are inside that fund, I think those are safe bets to put your money into during a bear market. So that would probably be my advice as far as investing and trading. And just be careful. You gotta watch yourself, and I would say you gotta be more on the conservative side than aggressive side in times like this. There'll be a time to be more aggressive, but now is probably not the time to be going too hard. So yeah, that's my advice. What do you got, Nell?
That's good, man. That's very good. Well, first I'm gonna say this. Historically, there's been 27 bear markets and 27 bull markets since 1928, right? So what's the big deal? I mean, bear markets are a common thing, right? But the difference is that a bear market only usually lasts at about an average of 9.6 months, and the bull market lasts about 2.7 years, right? So since most of the times in the market they're good times, this is when you got to start preparing, right? So you prepare. Preparation means a couple things to me. You should be doing your research on companies during the bull market, giving price targets to companies. That means you're probably not gonna find a lot of good deals during the bull market. So don't buy them. Quote unquote cheap prices. So, but people always say, oh, but a stock's never gonna go. They're never gonna get down there, so you should just buy it anyway. Yeah, I mean you can. That's true. But if you're invested for the long term, you also need patience, right? So just look at the last 3 years. There's been plenty of opportunities where stocks dropped way below whatever people think was that's too low. It's not going to happen. 2020, even this year, stocks they've been crushed. So there's always going to be a chance to buy stocks cheaper. And then preparation, it also means how are you going to buy these stocks, right? And that's where we go back to the last couple of weeks, our topic frames, debt and budgeting. If your finances aren't on point all the time, you're not gonna be able to take advantage of opportunities during bear markets. So
right.
You do your research, have your money straight. You have to prepare, do your research, man. That's the most important thing. And then don't go all in on the first big down move. When that first red comes, oh, I'm getting a great deal. Don't put all your money in there, because it could always go lower, as we've seen. It could always go lower. And then, of course, dollar cost averaging, it works. It's been a proven investment strategy that works. Nobody could really time the market. You could maybe time it short term here and there, like we've been doing with the industrials and the tech stuff. Right. But in the long term,
well, it just worked out for us. It wasn't, it's not a guarantee that it was going to stop.
It worked. It worked this time, right? That doesn't mean it's always going to work, right? So
right, like you could pick the bottom, but is it the bottom?
Yeah, you don't know.
It could go down another leg,
and it could be luck.
That's it, man. That's it.
I love the saying or the analogy. It's when there's a sale at a store, everybody wants to go shopping. But when there's a sale in the stock market, everybody's too afraid to buy. Like,
That's right.
You know what I'm saying? Why?
That's right.
Just be different. Don't be like other people, and go and build your wealth.
Yeah.
So that's what I got to say about that.
That was
Love
solid,
that.
bro. That
Love
was
how you said
solid.
that, man.
Yeah, we need one of those like clapping sound effects. You know what I'm saying?
Yes, sir. So I mean,
That was solid though, bro. Good sound advice, man.
You
Cool.
know.
Yeah, all right. Yeah.
All right. Well, my friends. Well, that concludes this week's show. Thanks for joining us on another episode of the Eternal Money Podcast. Don't forget to rate us, leave a review, and share this podcast if you learned anything or know anyone who would find this information helpful. Once again, follow us on Instagram at Eternal Money Podcast, follow us on Twitter at Eternal Money Pod, or find us on YouTube at the Eternal Money Podcast. Please tune in next week to see if the Fed will spoil
All right,
big
thanks
tech
guys
earnings.
for coming by.
Have a great week,
We're
everyone.
really
Stay
enjoying
cool.
the process of giving you guys some sound value, and hopefully you guys are too. So please continue to come by and listen to us, share, like, comment, whatever you need to do. We appreciate the support, and we see everything. So if you send a comment or a message or anything, we see it all. So again, we appreciate it, and we'll talk soon. Okay?
thank you guys. Keep an eye on the market and don't trust it. See you next week. Peace.
Get your money right, man. Get your money right. Peace.